Give me the crucial differences between those two countries and Mexico right now, which I think investors, as far as Latin America is concerned, are very much focused on right now.
Yeah, well, the causes or the origins of growth of these two countries are completely different. You know, what we had in Peru and Colombia is a movement that started maybe 10 years ago that was already starting in Mexico a long time ago. Mexico developed following the United States. Colombia, Peru, Latin America, it has mainly followed the rise of China and consumption of our commodities over there. So what we have is an earlier stage investment with higher growth and more opportunities that we can see in a more mature market like Mexico today.
When I talk about these two countries, I think of oil and mining. Is that where you are specifically investing, or where else are the opportunities?
Yeah, well, we look at what's the strategic advantage of each country. You know, obviously, Peru is one of the biggest mining countries in the world. Colombia went from 0 to 1 million barrels of oil produced every day, so there's a big competitive advantage there. Now, depending on the stage of that growth, the opportunity may be later on, for example, infrastructure in Peru, or even later on into all that capital being reinvested into more consumption, into real estate, or into later stage opportunities.
So you said the magic word there, consumption, and we always think about the rising middle class, or the lower to middle class in these countries. What about getting involved as far as the retailing sector is concerned in these countries? Because I know you told me earlier that you're not actually involved. Why not?
Because we think the cycle is more attractive for earlier stage investments. You look at Chile, for example, maybe one of the most successful countries in Latin America. There's more shopping centers per capita than in the United States. So probably the opportunity is not there. In Peru, in Colombia, there's a lot of infrastructure, power generation opportunities before the capital flows into that consumption stories.
So talk to me about Paraguay and Uruguay. What are you investing in there?
Well, as we invested 5 years ago in Peru and in Colombia, we are now starting to invest much more in some of these new countries that we see opening up to foreign investment. One example is Paraguay. You know, Paraguay is in the middle of Latin America, probably has potential for mining for oil, but never was explored. There's potential to finding very big things there, going very early stage, and for the economy to grow at much faster rates. An idea is Peru today, you said 4.5%, Paraguay last year, 13% GDP growth.
And how sustainable is this?
I think sustainable as long as companies and foreign investment is done in a right way. So an example is Uruguay. We started 5 years ago with a small blueberry plantation in Uruguay. We invested almost $600 million. Today we own the largest agricultural company in that country. So our investments and our companies allow these countries to generate sustainable development and sustainable export growth. That's what we live on.